Hello, everyone. Welcome aboard. It's lovely to have you back. When I say everyone, I think there's Paul P, you and me in the room, mate, at the moment. So thanks for joining me. And I hope we get some more people in the room in the not too distant future. Maybe they've forgotten at this point. I know Ash hasn't. Ash will be with me shortly. He's raring to go, I know. And all good systems or spectrum is green. I think that's what they used to say in the, what were those puppet things? Escapes me. Not Rocket Man. Whatever it was. Anyway, it's great to be back, I've got to say. Had a lovely break. Looked no charts. I think actually that's not true. I looked at a couple of charts. Didn't place a trade. And had a really, really nice breakaway. Sadly, probably, that I didn't place a trade because what we were looking at prior to Christmas pretty much unfolded. Let's see what's going to happen post-Christmas, shall we? And one thing I'm going to do is change the breakout. Let's start with that. The London Open. And there's a reason that I'm doing this, of course. And it's all about the trading retreat, which took place in Bali in late November. And there I learned that somebody else in the group, Peter, actually, the guy who, Happy New Year to you as well, Paul P. Peter, our resident IT guru who does all the programming for the EAs, he's been trading gold as a breakout rather than pound as a breakout on the Open of London session. He's been doing it very, very successfully. So I thought, well, we can do that. So let's do it. And I'm not sure of the exact methodology he was using. I must have a chat to him now that we're all back at work and see how that was going for him, what exactly he was doing. What we're going to do is go back to the original. And the original, of course, was to isolate the Asia session, which is this candle here, the Open of Asia, and the current candle, which is this one on the hourly chart. But instead of using the midpoint, we're going to trade the breakout per se, because that seems to be, if I look at these charts, seems to be the one that's working quite well. For instance, there's the range. On last Thursday, broke, got the result. There's the range. Last Friday, broke, got the result. And there's quite a few occurrences of that. So that's what we're going to try and do. So it's simple. We're going to trade the break of the low as our entry. We're going to trade the break of the high as our entry. So it's an OCO. One cancels the other. If the long gets triggered, we cancel the short. The short gets triggered, we cancel the long, as per what we were doing in the first place with the pound. So today, the levels are, the high of this bar is 1880.97. Let's call that 1881, shall we? Because that's pretty much what it is. There we go. So that's in place. The low of the range is 1867.14. We'll call that 1867. Uh, 1867. Hang on, guys. I need to open a box that's not there at the moment. There we go. I said we've now got Gary in. G'day, Gary. How you doing, mate? Happy New Year to you. 1867. There we go. And that will be the entry for the long. That will be the stop loss. That will be the stop loss for the short, and that will be the entry. So let's see how that pans out. Now, in terms of targets, we're going to use obvious targets. Hang on, I better get this in the market. Actually, I'll do it on the trade. What's it called, that thing? Actually, I don't think I've got a license for it. at the moment. I needed to do that today, and I didn't do it. What's it called? Traders Toolkit. Is that it? I think it is. Oh, looks like it might let me do it. Traders Toolkit. Cool. New order. Have we got OCO? Yes, we do. So we tick OCO. That's one thing we want to do. We want a very, very small risk on this because it's in trial mode. Entry shifts, no, we don't want that. So we get rid of that. We don't want that, get rid of that. Horizontal level. No. How do we do this? How do I put an entry level in? Looks like I don't. All right, so I have to use the candle. So 1, 2, 3, 4, 5, 6, 7, 8. My God. This is not going to work. Okay, I'm going to have to use the trade manager. Sorry, guys. Let's go with trade manager. Do you really want to? Yes, I do. Okay. All right, so let's go with the trade manager. This is going to take a long time, guys, so I hope you can bear with me, please. We'll have to get rid of that and go with clicking on the trade manager. You guys won't want to do this, I'm pretty sure. And go to inputs. Inputs, again, we need to click OCO, enable OCO, yes. True. My God, this trade could be over before I actually place it. Anyway, true for OCO. Entry 1 is what I want. Buy entry level 1, yes. That's what I want. Yes, please. True. And that entry level will be, as I said, 1881. We'll allow 1 pip for that. And we'll go 1881.10. 1881.10. And the stop loss level will be 186700. We'll go with that. 1867.00. My God, what just happened? Stop loss level 1. 1867.00. Okay, that's what I wanted to do. Entry level 2 is a sell. Yes, please. True. Entry level 2 will be 1867.00. Told you this trade could be over before I enter it. Stop loss for level 2 will be 1881.00. And I think we're good. I think we're good to go. Now we need a risk. What was the risk? Up here somewhere. Okay. Like I said, this is definitely in trial mode. And what we now need to do is take profit. You know what I'm going to do? I'm not going to take profit here. I'm going to do it manually because it's going to take an hour and 17,000 minutes. Otherwise, buy at entry level 1, yes. Sell at entry level 2, yes. Right. It's set. At least we'll get in the bloody market. There's got to be a better way. Look at Ash. He looks as fresh as the daisy. Fresh as the day he was born.
I'm far from fresh as a daisy.
It's all a ruse, is it? It's all a lie.
Oh, mate, yeah, it's been heavy.
What's up?
It's been heavy. Yeah, I mean, brilliant time, mate. Brilliant Christmas, really good. But I am getting back in. I got back in. I dipped my toe in last week. And last night I started doing the reports again. So we're kind of all back on, mate. We're all back on and ready for the year.
I'm pleased to hear that because I've got a few questions that
Okay.
I've got no idea what's been going on. I've not had the charts open at all.
Yeah.
I had one little look on Friday, I think, and I did place an order actually. But I did a little bit of an educational thing as well for my group, and I placed an order after I saw Euro Yen. I saw Euro Yen, and I thought this looked very, very interesting for a short. So I traded short underneath that bar, and it's just gone up ever since.
Yeah.
So it might take a little bit of time to get back into the swing of things, but it still looks like it could go short to me. But obviously the most interesting point in the last few days has been NFP and the numbers that came out there. I saw the response to that, and I thought, oh, this is going to create an opportunity. Not to go with the response, but to go against the response. And I kind of had a look at the numbers, and I thought, oh, that's an interesting response. And this is the question I want to ask you. It seemed to me that the market reacted not to the NFP, but to the services managers PMI.
Yes, very much so. It was quite interesting. I mean, they did sort of react to the NFP as well, because what you may well have looked over, which many people would have done, was the average earnings, and the average earnings were lower. So even though
I did see that.
Yeah, so the employment rate was higher, but the average earnings were lower, and that really did start to kind of move the market. But you're right in some regards, mate, because the jobs numbers that we were having really right the way through the week were all quite positive, and yet the market managed to shrug it off. You know, the market wasn't keen on selling at all towards the tail end of last week, so it only needed something really to kind of like ignite the fire and get it going. But you're right, the ISM numbers was the thing that really ignited the fire, because that suggests that inflation is coming down, maybe at a faster rate than they previously thought. So that's all it wants. You know, the market just wants an excuse. That's the way it seemed. I was trading the Nasdaq, and I was sweating on it because I was buying it at the lows. I was trying to kind of get a nice run to the upside. And it kept pushing down, but it didn't push down with any sort of real velocity. So I was relatively safe, I thought, just to kind of hold on and see what was going to happen. So that's what I did. I waited it out, and it did turn around, and it went very, very well in the end. But you know, it was. I don't think a stellar reason really to sort of like flip things around. There's one number, and the market reacted off that one number, but it was really kind of primed to go. You know, we were at extreme levels, and it's the buys were starting to come in, and you know, we'll talk about COT data and everything else in a little while, because the COT data really did show us, not that we would have seen it until yesterday, but the COT data shows us that there were buys in the market right the way through the week, and then when it got to Friday, the market just pushed because of that ISM number. So so now it needs a reason to continue to the upside. I don't know if you've seen, but the FTSE has been on an absolute tear. I mean, it's the one market which is not really reacted in the same way at all. It's been going and going and going. It's been very, very keen. So yeah, the Nasdaq, not that it was playing catch up by any stretch, but the Nasdaq was the one that I was watching, because I knew that if there was going to be an explosive move, it would always be on the Nasdaq, and that is what happened. And obviously, sort of gold and everything else followed it. The dollar is weaker.
Yeah, I think that's the main point I wanted to discuss with you today.
Yeah.
Because I see the dollar at a very, very strong support level.
Yeah.
Which is this level here.
Yes. Yes. So yeah, well, let's talk about that stuff as well, because there's been.
So when I think about this and I put two and two together, I think, okay, euro dollar today is a sell for me, because this is a buy zone for the dollar.
Absolutely right. I suppose the question now is why do people go out and buy the dollar? So I think what we've seen is, in fact, I'll share my chart just briefly, mate, and we'll sort of we'll talk about the price action and how it kind of it did relate to the numbers and how it did wait for the numbers because this is
Actually,
the
before you do, I do have an order in the market. I don't know if it's now gone into profit, so it's too late. I did trade this morning, pound yen, first one of the year.
good man.
And it is a game changer bar that I'm actually trading. And I'll go through those in a little bit when you're done with.
Yeah, fantastic. I mean, I also had a yen trade on this morning. I had a Kiwi yen, which I've just closed, and I'll maybe sort of show everybody why. But I had a Kiwi yen trade on because the Kiwi actually comes out, and I was fortunate this morning to be up when the market was when MT4 was opening up the market. I should have really been in bed, but I was still kind of working on some stuff. So I got into a Kiwi yen, and the reason I got into the Kiwi yen is the Kiwi did show out to be the strongest, and the yen, yes, you're absolutely right, is the weakest currently. It's the currently the weakest of the currencies. There is
What's new?
Yeah, exactly, mate. Well, this is the thing, and we're kind of back there. I don't know whether I've got. Here we go. There is a monthly pivot up here, and I saw it fell here. So just when it's gone back to the highs, I've taken it off. But there's probably a little bit more in the Kiwi yen, and really, I'm looking for the Kiwi yen to go a lot higher by the end of the week. So what I'm really looking for is a little bit of a turnaround here, so I can get back in again, because there was a relatively explosive move. But the looking through everything, the FTSE 100 has been, as I say, on a tear, completely different to the other markets. Bang, it's just gone. And not only has it gone, but if you look at it, it is getting back to these all-time, not that far away from these all-time highs. It's cleared out the previous level that it needs to break through back in 2022. So above the COVID levels at last. Little inverted head, well, big inverted head and shoulders here on the monthly as well. So looks like the FTSE really could explode to the upside. Question really I've got for the FTSE is why. I mean, I've got I've been scratching my head on this one. Not one I wanted to trade. And usually the FTSE is my bread and butter, but I was actually looking for shorts in the FTSE because the recession concerns would suggest that if any markets are going to come down, it would be the cyclicals, and the FTSE is a cyclical kind of market. If you look at the Nasdaq,
Doesn't before you leave that chart, sorry, doesn't that then give you with your previous bias, I suppose?
Yeah.
Now a good reason to pay attention because you are at these highs.
Yes, it does, and there's a few of these. So yes, this one would give me a reason to pay attention to the downside, but I don't see the reason yet. So yeah, yes, it does, and I think because I've been burned on the FTSE, and because I've been scratching my head about why. You know, I know China's opening back up, so that's possibly the reason. But if you look at what happened with WTI at the same time, that was falling. So it kind of didn't make much sense to me. You know, the WTI was falling. It had a little rally, but it was coming down, and the FTSE was going up, 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 up. So and copper, you know, they're the two sort of like main things that I look for, WTI and copper. Again, okay, we have had 3 sessions of upside, but it was really falling for the previous ones of that. FTSE has just been going and going and going. It didn't have 3 sessions. It was just going. With one little pause here, but just going. So copper.
Sorry, mate. What was that last chart you had before that?
This is copper. So copper was suggesting that at least we were in a zone. But you see, copper's taken off now because of China. You know, because of China's reopening, this suggests now that there's going to be some demand for some building materials. So that does suggest that copper should be moving higher, but it wasn't initially. It was moving lower because of recession concerns. Now copper's got a decent chance to go even further if we look at the top.
That's a fairly substantial range break if it can hold it.
Yeah, well, I wonder whether whether this is the actual range for copper, and we're just sort of we're closing on the highs of it, but it would suggest that we would get back to this level. Looks pretty pretty touch perfect, really, when you sort of look along the zone. So copper's got some room to travel, and if copper's got some room to travel, that would suggest the FTSE could still travel, and that's what would put me off with shorting the FTSE at this stage. WTI has now taken off back to the upside. And does it hold here? I've still got a few kind of reservations about WTI, but testing this monthly pivot looks likely. That would also put me off shorting the FTSE. You know, this stuff's playing catch up and should at least support the FTSE from coming down. You know, copper and WTI. Copper and WTI should support the FTSE coming down. Now, the reason for that is twofold, really, or my thinking for that is twofold. Firstly, copper, WTI, both growth products. The FTSE, a cyclical market, which does kind of mirror recessions better than most. Then you kind of look at the breakdown of the industries in the FTSE. Shell, WTI, Rio Tinto, copper, BP, WTI, Glencore, copper, Anglo America, copper. So we're looking at sort of, you know, metals that and oil that make up some of the biggest stocks in the FTSE 100. So that would suggest there's probably some room either to go further to the upside, or at least not break down. So that puts me off the short on the FTSE at this particular moment, and we would need to hear some sort of issue with recessionary concerns that would drive both those products down and subsequently the FTSE down. And that could happen. You look at the ISM numbers. The ISM numbers are showing shrinking growth. But right now there is a boom on the China story. The China story is now finished because we opened up today, I think. So that really could be now priced in. So yes, we could start anticipating a turn, but I'm not sure whether it's there yet. So that's the first thing. The second thing really is the Nasdaq. The Nasdaq, I was buying down here on the lows and sweating it out, but it eventually explode to the upside. Really solid bar on Friday, all Friday. But the thing wasn't with the Nasdaq. The thing that I was watching was, yes, it was coming down, but it was easing down. But this one big bar was relatively negative, and that was off a speech, and off the minutes, the Fed minutes, which said, you know, we're still going. But then we started to see this kind of pause. Then we see the price action on Friday, and the price action on Friday was made up firstly by some of the jobs numbers, but then the average earnings started to come out, and the average earnings were around this point here, and then we started to push to the upside after that ISM was released. So this is off the back really of average earnings and ISM. Is that enough to suggest?
That was another question I was going to ask you. Do you actually believe that average earnings number in an inflationary market where people have got to be screaming, certainly they are here in Australia, for more wages or higher wages, and they're actually getting it from the public sector, right? I'm not sure what's happening in the private sector, but that number doesn't make any sense to me, because I would have thought it would be quite the reverse.
Yeah,
because wages have to go up.
Yes, they do. You're absolutely right, mate. But the question is, what's the policy of government? Because in this country, government are really holding out. You know, there are strikes going on. We got rail strikes, we got NHS strikes. So the government is in negotiations supposedly now with the NHS, but it's held out so far. You know, and wages haven't really gone up significantly. You know, there's still April before we start to see the budget potentially change things with wages, but it will probably sort of sink until then. So average earnings may well have gone down, but I think the thing with it is that the labour market's such a complex picture, because there may well not be so many job losses, but also people may be working less hours. So I don't know how the average earnings is calculated.
Yeah, how they count. Yeah.
Is it down to what they earned in total, or is it down to
hocus
what they
pocus,
earned versus the hours worked? Yeah, it's tricky. So, you know, the statistical evidence is always just on the face of it, and on the face of it, it's coming down. But as I say, I don't really know how they're calculated, and I don't think it really matters because all the market really wanted was a disinflationary number, and they got that disinflationary number with the average earnings, and then they got the ISM, and the ISM was a significant miss. and I think that's the key really to the big boost to the upside. That not was it weaker than expected, but it was a huge miss really, and it would suggest that there could well be just some pressure that's built that's just exploded, and what the market is now wondering is, are they right? Because if they're right, then we might well start to see some of the other numbers start to fall. And if we look now at what in fact, before we move on to the fundamentals, let's just check what's going on with gold, because it's the same picture with gold at an absolutely significant level with gold. Look at this. I don't know if you've had a look already, but look at this.
I'm
Bang on
watching it
that
closely.
trend line. Boom on 1, 2, 3 touch trend line, and we're right on top of it, right on top of that trend line. Then you go to the weekly, and you've got a horizontal level here, which looks solid. There, and bang on that horizontal level. So it looks to me like gold is now at the sell zone. It was questionable whether it was getting there already. Now it's there. This is at the sell zone. So that would suggest that not that people will be selling gold per se, but does it suggest actually that people will be buying the dollar? And when you look at the dollar chart, as you quite rightly point out, the dollar's in the exact reverse of that, where we see the dollar at significant levels now. This is the pre-COVID high, if you like. So we're back to these levels along here. Looks like it did break down a little bit, so it might be that we need to come down, but we are in and around this number, and
100%.
And this is probably, we're probably looking at possibly that instead, but it doesn't look like there's much room. It's possible again that it could be down here, which what's that going to be? Maybe another 1% drop in the dollar or so. But we're getting close to a level or levels that the dollar should be finding some support. Could be sort of in a little bit lower. But again, would you buy the dollar just yet? Doesn't look like it. It looks like we're still possibly waiting on something to happen with the dollar and flush it out. But we are on significant levels. I mean, this is the level here actually. We're on significant levels with the dollar. We're on significant levels with gold. We are on significant levels with the euro and versus the dollar. We're on significant. Here we go with the euro. Same thing here. This is a monthly chart as well, not just a piddly old daily. This is a monthly chart, right on top of that level, right on top of the level with the pound as well, which incidentally is a terrible currency to really be sort of like looking at. But the pound has managed to rally. So now the question comes, what is going to push this market and turn it around? Because there are so many conflicting moves going on in a way, the way I'm kind of seeing it, because of the recession situation and copper going one way, oil going one way, the FTSE going one way, the Nasdaq going one way. The yen's the obvious sell right now. But let's have a look this week at the economic calendar, and we'll bring it in with this. Good morning.
I'm so glad you've got yourself up to speed, mate.
Yeah, well,
I'm so far behind, and this happens to me every time in January when I come back and what has happened over the last 3 weeks?
Yeah.
And the market's kind of telling me a few things, as you've just been through, with the indices rising and the dollar falling.
Yeah.
But as you've pointed out, they're now at significant levels, and with the new year, I'm of the opinion that the better way for me, or my bias now, becomes I want to go in the opposite direction to where we've been going for the last 3 weeks.
Yeah. Do you know, Wade, I'm totally with you. The issue really is that there is a getting burn aspect to that as things change.
Well, it's counter momentum, yeah.
Oh, mate, do you know what? I mean, and I've had it. You know, as I say, I had it last week. I got burnt up on the FTSE, and I flipped it on the Nasdaq, which you know that did sort of make the money back, but I was completely blindsided by the FTSE move because I was just looking for the short with WTI and everything else. You know, that was kind of like going in one direction, and the FTSE kept going higher, and I was like, what is going on here? So then I had to effectively, and I don't like to say it, but I had to take a punt because the Nasdaq was not okay. We were on support, but we weren't seeing any sort of data which suggested that we should be going long the Nasdaq. But I had to take a punt that the next number was going to come out in my favor, and I was fortunate that it did. But let's have a look at it. So Wednesday. In fact, let's go back to last let's go back to last Wednesday. So we start with the ISM here, but the big thing was really jobs openings, the jobs openings here. So the labor market is really, really important. Jobs openings were better than expected. So that was the first negative move for the Nasdaq and maybe some positivity for the dollar. We did see a little bit of dollar rally. So gold and everything else coming down. FOMC minutes back that up. You know, they're basically saying, don't get excited. We are not going to be changing our stance here. ADP non-farm employment came out better than expected and better than previous by significant amount as well. Big problem again. You know, you're trading the Nasdaq long, you're trading gold short. This is not you're trading the dollar short. This is not supportive of that. That pushed the dollar higher. It pushed the Nasdaq lower. And it pushed gold a little bit lower as well. And silver, which is the one that I was interested in, which we'll come back to later. Unemployment claims dropping again. So all this stuff really was pushing the dollar potentially higher from this point and everything else in the opposite direction. But then Friday came, average earnings, a dip in average earnings, and the non-farm employment change was better than expected, but still worse than previous. The unemployment rate improved, but this was the focus. And actually, all that really happened during this period here was a pausing of the downside with a slight bias to the upside in the Nasdaq. And then we saw the dollar sort of weaken just a little bit. But you're absolutely right to point this number out, because this is disinflationary. And as soon as you saw that, and really the factory orders as well, the dollar turned around. Because what the market is basically saying is, every time that Jerome Powell and these cronies speak, in actual fact, what happened before that, which is not listed here for some reason. I don't think it was listed on the day before. It's not. Okay, so Bullard, who's not a Fed voting member, but Bullard actually said, look, we're getting pretty close to the rate where we're able to be restrictive right now. So he said something relatively positive, but it didn't really help the market out. It still sold off. But anyway, this come out, and so what the market is basically saying is, we don't believe you, Jerome. We don't think that you are far away and going to keep raising interest rates. We don't even believe that you're going to hold where they are. Because as soon as you see this kind of thing, it suggests there must be some loosening of policy. All they're waiting for is the unemployment rate, and if the unemployment rate starts to increase, perversely, that's going to push the market higher. So that's really that's where we were last week. Now, if we go to this week, what have we got? Well, not a lot today, which suggests that if you are long the Nasdaq, the FTSE, you're trading the yen short and all that other stuff, it's a day that you're unlikely to get stopped out. You know, if you've got those trades on, you should be okay. Whether you take profit early, I've taken profit early because that's my nature. But you can probably hold on to those. Or at least kind of like shift your stops to break even if you got in a decent enough price. There's nothing today is the point that is going to really move the market around. But then you get to, well, okay, nothing today except for the tail of the day. Tokyo Core CPI year on year. Now that could have an effect. If that is high, the yen potentially starts to form some sort of base and possibly even turn around. I don't know, but that's an important number, and it's an important number.
It's interesting that they haven't rated that higher than a unimportant number?
No, well, I think it's generic. I think when they sort of like they look at these sort of like the numbers kind of get the same grade no matter which condition we're in. But the market conditions have changed, and because the market conditions have changed, then CPIs out of
Yeah,
Tokyo are actually quite important.
very
And
important.
also it will depend on the differential between it, because if we think about the significance of the ISM, it's a huge miss. 49.6 from 55 is a massive
Massive.
miss.
Mm.
Now, if that miss wasn't so big, it's possible that the market wouldn't have reacted quite the way it did. But it's a big beat on ISM. Um, so this may or may not be significant. It depends on how stretched that is. The unemployment rate out of Europe also could be important. I mean, that's coming out in a little while. So that could push the euro for maybe a short term move, but it could be bigger, because the thing is, the unemployment rate isn't quite as significant for the ECB as it is for the United States, the Fed, because they're in a kind of different space with inflation and with what's causing rate hikes. Then we get CAD. So this is where it starts getting interesting. Now, can Jerome Powell say anything on Tuesday that turns the market around? Yes, he's probably going to create some volatility. Yes, there could be a pause. Yes, there could be a reversal for a bit. But does he actually say anything which actually changes the route of the dollar? You'd have to say no, because at this stage, the market is basically saying, we don't believe you, because these numbers don't, even though these numbers are backing up what you're saying, i.e. the employment numbers are backing up what you're saying, we're going to react every single time there is a number in our favor, but we're not going to react if it's against us, not significantly anyway. So I don't think he's going to be able to say anything. And again, mate, red folder. I don't know, maybe I'm wrong, but what can he say? What can he say that's different, that really sort of spooks the market to then say, buy that dollar up? I'm not sure he can say anything. And in actual fact, I think he's more likely to say something which supports the current move. So we do see the NASDAQ further to the upside, because all he needs to do is say something relatively benign, like, we could be getting close. If he says that, the market's taken off. He doesn't have to be anything defined. He could just be quite benign and quite sort of indefinite about things, and the market takes off. So I don't think
you're ruling out that he's going to say, well, we're happy with the numbers that we're seeing, so therefore the tightening cycle maybe just cut back a little bit. Or
but what I'm saying is the market doesn't believe him. He can't say maybe. He's got to say something firm.
Yeah, something different.
Yeah. So I don't think that's going to change anything. CPIs out of Australia could be of interest. Forecast to be higher. So yeah, we could be looking at Aussie. And the thing is, the Aussie, this could be another really good currency right now, because if that beats the forecast or is in and around the forecast, Aussie looks good. What we've seen is risk assets are back on the table. So that means the Aussie is a good currency to have a punt on. The 10-year auction is not going to do anything. Building consents from New Zealand could help that move higher. Depends what happens with CPIs from Japan. Will probably face the yen for the week. Thursday's where it gets interesting. This could be the turnaround, and again, it's going to be down to, do these numbers significantly beat these estimates? Are we really seeing inflation falling? Because what the market is now hoping for, they've had the unemployment numbers, that's now behind, that's priced in. The unemployment doubt that they're saying to Jerome Powell is priced in. Now they're saying, is the CPI falling fast enough? Because if it is, Jerome, we are not having it that the dollar's going higher. If CPI comes in anywhere near 6, the market takes off and the dollar tanks again. I think, no, maybe not tanks, but the dollar again falls. If it doesn't,
if it leads with a 6, yeah, I agree.
If it leads with a 6, well, yeah, but possibly not. If it's a 6.7, let's say, and higher, that could provide downside for things that are at extreme levels like gold. So I think this is a really interesting one on Thursday. And the thing with it, and we'll come back to the chart in a moment, but GDP, I mean, forget the pound. It's just it's a load of rubbish. And the thing with the pound, which I find the most interesting, is that you could probably look for this number here to be higher. Let's forget the going with the flow here, because this is suggesting that the market, that the CPI is retreating. Let's say that the CPI is actually higher and unemployment claims are lower. So all these numbers favor the dollar. My punt would be go for the pound, because this is going to be a load of rubbish. These numbers are going to be terrible, probably. They've got a high chance of being a load of rubbish. So the pound dollar short would be well and truly on, and this will probably help you on Friday as well. It'll probably back it up. It is my point. You probably get a little bit of a chance on Thursday to wait for the number and have a bite at it, and then you're probably going to get backed up with further moves in the pounds on Friday as well. Then we get preliminary University of Michigan consumer sentiment, and this number is completely useless at this stage now. It won't do anything. All it will do is if it's in favor of the market will keep going. If it's not in favor of the market will probably ignore it, because the CPI is the big ticket item. So I think Thursday's the one, mate, and I suppose it's back to the point of there might be opportunities Monday to Thursday, but don't expect them to move the market significantly, because they're going to be small, short-term opportunities, which ultimately make them a bit harder. Yeah, you're looking at Wednesday really before you're going to get a any kind of genuine turnaround, I think, in this market. So I think if you can make some money early doors, you're in pretty good shape.
Yeah, I'm of the opinion that what has happened over the last 3 weeks will be quietened, tempered, I'll put it that way. And that includes gold, that includes the dollar, that includes the euro, it includes all of those things that have benefited or reversed their good fortunes of the previous months or whatever. And I'm really keen today to get short euro dollar, really keen. Yeah. And I'll point that out to you when you're done.
Yeah, well, no, I do believe I am done, mate. Yeah, I don't think I think I don't think there's anything else that I've really got for right now. We've had a look at the charts, and all those things are at those levels, and I suppose what I'm saying is let's not expect this market to turn around in the next at least 3 days.
So you're saying don't go short euro dollar, Jeff? Don't be an idiot.
well, for you, I think it's a bit different, because you are looking on the short term, and the other thing about this is that the market's also unlikely to take off to the upside on something like the euro dollar, because we are at significant levels, or getting close to anyway. We're getting close to further significant levels, and it's unlikely to push through that before that CPI. So there may well be some shorts, selling into the number I think is on, but because you're trading on this on a short-term basis, I think that's okay. But I think anybody looking for the daily charts and above, I think they need to be extra careful. Maybe even the 4-hour chart and above. I think you need to be extra careful about counter trend trading at this stage.
All right. Well, let's start with that and work our way through what I have been looking at since I opened the charts today.
Cool.
And I did have a fairly decent look. So let's have a look. See, but let's start with the euro. And the euro, as you pointed out, and the chart, it's pretty clear to me on the monthly and the weekly that we are at a support level. So I don't have a problem with that. The weekly chart.
Oh, let me stop sharing, mate, so you've got the screen.
Oh, haven't I got it? Sorry.
I hope I say good morning to you guys, and good morning, Paul. Sorry, mate, I missed your message at the start.
You got me now? You should have me now.
Gotcha, mate. Gotcha.
Okay. The one thing that does concern me a little bit is the weekly chart showing me we're a little bit short of what I consider the resistance level to be, which is, why have I got that in that colour? My God, I can't read it. It's 107.75, I believe. But the monthly chart is showing me that we've got an oversold euro. We are at a support level. or form a support level, which should provide resistance. And then I go down to the daily chart, which shows me that we are way, way, way above an untested daily pivot, which of course is my thing. And we are at a resistance level on an intraday basis. So I'd be expecting a bounce off this trend line. Then I go to, well, let's say the hourly chart will do. And here's where you will notice that untested daily pivot. Sorry, I've changed all my, I do this every year. At the beginning of the year, I change all my templates.
I like these colours.
Just because, for no other reason.
I like that. I like it.
Yep.
The cream.
Yeah, why not?
Strange brew.
Get on top. We've got a daily resistance level right now. We've got an untested daily pivot, we've got an untested weekly pivot, which was just smashed through on Friday with that big number, or sorry, not that big number, that big reaction to the numbers that we've just discussed. We've got not even look like coming back on that at this point. If I go back to the daily chart, there's that trend line that I'm speaking about. It's just shot straight through the monthly pivot, and shot straight to this resistance level. I've got to think I'm in the buy zone, sell zone right now. I've got to be thinking that. So all I'm waiting for is an opportunity to trade. And as you said, Ash, it's only a short-term thing. The only thing I'm interested here right now is getting to here.
Yeah.
And how I can trade it to there. Now, at this point, I'm really pleased to see that bar there, because had we just kept coming off this one, then I would have really not had a chance to get into the market. But now I've got an opportunity where I may have a trade line forming, and then I can look for reaction off that. So I'm looking for a candle pattern. I'm looking for a break and retest. I'm looking for something like that, so I can trade down to here. I would probably have to respect this level, that level there. It's in there somewhere where it's been, it's come back and retested that level and gone. So I'd probably have to be looking at that as a take profit level. But I think there's two phases, one here, one to there. If I can find that somewhere, a way to trade that, then I think that's going to be my trade of the day. That said, on the longer term scenario, there are quite a few that have attracted my attention, and I think the best of them, apart from one that I'm trading, that terrible currency, the pound versus the yen. And the reason I thought that was a reasonable risk to take today, and I hate trading, but I think I'm going to have to change my MO. I hate trading bull bars long, as you know, but this one looked particularly juicy to me, and I couldn't see this not going to the monthly pivot, frankly.
Yeah.
Looks like a pretty clear range trade to me at the end of the day. Okay, we haven't had the higher low, but if you look at that support level, this does look to me like it's going to the monthly pivot, and that's where I'll take some profit and get safe in the market. If it does go back to the top of the range, happy days. But that's not the one I'm most keen on. The one I'm most keen on is CAD Swiss. In terms of the game changer bars, this is a clear game changer bar to the upside, but as always, I don't trade a single reversal candle. I think this has run out of steam, and it has hit another support level here that you can pretty clearly see on the monthly chart. So yes, I'm expecting this to maybe go back to range, and that range for me is quite a distance away. And you're probably looking at, well, take your pick, somewhere up here.
This is an interesting one, isn't it, the CAD? Because the thing with the CAD is that, with WTI pushing down, it hasn't had the best of times of it. But now with China opening up, do we get that boost in WTI? Do we start to see the CAD opening back up again? Commodity prices actually dipped as well, which haven't helped.
No, but apart from that, I see no other reason why the CAD should be weak.
Yeah.
Pardon me. And if commodity prices do find a bounce, and if let's go back to oil once again has come off the bottom just a little bit. And, if I really want to analyze this chart, I see that break, and I see something that looks a little bit like a wall of worry here. And then I see the potential for this to be our good old friend, the what do they call that thing? God.
Sentiment cycle.
Yeah, that. What do they call this point?
Is it extreme doubt or no?
No. If that's the wall of worry, then that's the aversion point. That's the word.
Aversion, yeah.
Right. So if that's going to be the case, then this takes off. And I don't mind that. We've got a bullish engulfing bar here, so potential reversal, and we've got a potential higher low. Well, it is a higher low now, I suppose. So I'm on board with that. The one thing that does concern me, and it is a weekly game changer bar as well, but in the opposite direction. That's a little bit of a catch. So that's the one thing that does concern me. And the trend is pretty much established here as well, with lower highs, lower lows. So this could very, very easily continue that trend. I'm particularly interested in it because this is now that potential higher low. And if I were to get the chance to trade it, I'm looking at oil. I'm an idiot. I'm supposed to be looking at CAD Swiss. No wonder I can't work it out. Here's where I find the double bottom, and I'm looking for a daily pivot test as a higher low. So if oil goes that way, then CAD Swiss should certainly follow. And I do believe that a little pullback here, just a little pullback on the daily chart, gets me interested. I can't trade it from here, but if I do get that pullback, I'm more than happy to do so. Maybe that happens on a 4-hour chart. The 4-hour chart's pretty messy. I'm going to have to wait on the daily for that to happen. So I want to sell. I want some sellers to come into CAD Swiss so I can buy it up down here somewhere. That, to me, is my chart of the week. There were quite a few others that I was looking at as well. My bias on euro dollar probably leads me away from what I was looking at on euro yen. And I was looking at euro yen, it leads me into euro yen. But unfortunately, I've got a bias short yen and long anything else. The little tweezer top sitting here is a little bit out of context, I've got to say. And I actually placed an order on here. It's the first chart I looked at on Friday. And I placed an order underneath this bar, considering that this could continue the trend going short. It hasn't done that. And I'm now a little bit confused as to why the euro is rallying, not so much against the yen, but I'm really interested to see what happens if this is taken out or if it isn't. The highs, if they're not taken out, then I'll probably cancel or get out of the pound yen trade, because that's going to mean to me that, pardon me, the yen is not as weak as I think it is. So I'm looking at that very, very closely. The other couple were also Swissy yen was another one. And I've got no idea why Swissy should be in my sights at all, except that we've got that, I suppose, follow-up bar to this one. It looks as though it needs to rally. And there is a pretty obvious target up here, which looks to me as though it's interesting. So it's just the same theme, that a weak yen leads me into any currency against it, and they all looking quite okay. Which is the best, Ash? That's the one. What's the best?
Well, the Kiwi is coming out on top now.
That's yours, right? Yeah.
Yeah.
And interestingly,
in accordance to COT and everything else,
that is also on my, and it's also a weekly game changer bar. So maybe that's the one. Okay, so I agree with you in terms of technically weekly game changer bar already in the market. So maybe Monday was the day to get in. I don't know. I've gone pound yen. Kiwi yen looks probably as good or better. So I'd agree with you there. Indices wise, and you were going to speak about silver, but I want to speak about silver as well. And the reason I want to speak about silver, and we spoke about this going into Christmas and the expected rally on gold, which has taken place, would take silver with it. But silver didn't have as much room, in my humble opinion, to go as did gold. And silver is right now, in my opinion, at a sell zone. So I'm looking for that to happen. There's a little bit of a confluence in here with that level as well. I don't know how strong that is historically. Yeah, it's got a little bit of form over here as resistance. So I'm quite keen to look at a sell on silver. Not sure how I find that at the moment. Yep.
My thoughts on silver are if the dollar pushes higher and gold pushes lower, and it's due to recessionary concerns, silver's a much better short because of the industrial aspect to the metal.
Yes. Yeah. Okay.
So I quite liked the short on silver, and silver has been a really good hedge against shorts with gold. But actually, I think you could almost flip that now and start looking for shorts in silver. If there's a long in gold, I think there's a short in silver, and I think the hedge is on because of the recessionary concerns, and it does depend on, we're seeing disinflationary numbers kind of come out with those ISMs, which do sort of like help things out, like the Nasdaq, and potentially push the dollar lower. But those disinflationary numbers are also recessionary. So potentially recessionary is that as they dip below their growth levels. So something like silver to me looks quite interesting.
Yeah, here's the backup for me. Like, there's a few reasons. One of them obviously is that confluence where we find it. The other is one little, two little, three little Indians, or three amigos, as we've now labelled them, rather than three little Indians. So false break, false break, false break, and a double cross on the monthly pivot. If I were to take a trade now, it would probably be underneath that bar there, but I think there's going to be a far better price to be had with silver. And that's why I'm waiting up here. So maybe even on 4-hour chart that comes to pass. I'm not 100% where I'm going to find it. Maybe it's as a false break of this resistance area. And that would make sense to me because there's a horizontal level coming through here. If we're to get up there fairly quickly and then come back underneath and retest that area, that's where I'd like to jump into silver short. Gold. Yeah, look, this is a seasonal thing for gold. Everybody and his dog who trades gold was expecting this to happen, and it has. It's played out, no question. Yes, we find ourselves at a resistance level. I was disappointed that I didn't get a chance to see. Well, didn't get a chance. Obviously, didn't get a chance. But I saw this down here. I really saw this down here
me too, mate.
Before it went long. Now, can that still happen? Yeah, I think it can. Am I biased that way in blind faith? Maybe I am, because this could just keep going and going and going. You know, once they get a sniff with gold, they tend to go a fair distance. But I've still got a double top. I'm still looking for a lower high. And if I see that on gold, I will still look to trade it short. I haven't traded
that
it
sort
yet.
of 1800 level looks interesting, doesn't it? I mean, I don't know whether it comes back as far as we want it anymore, but 1800 now looks quite interesting.
Well, it was always the key level, wasn't it? Because it just couldn't get through it, couldn't get through it. And that's why I was expecting it to maintain its resistance and drive this back down to here. So we could have hit that level again, and that would have been a perfect place to buy gold. 1700, that would have been perfect.
Yeah.
But it didn't give us that opportunity. I'm sure Ainsley and the gold traded cohorts don't give two hoots about that. I'm sure they're having a wonderful time.
Yeah.
But yeah, I'm still a seller if it presents itself. Maybe only as a retracement. And as you say, that retracement may not be as deep now as I anticipated, but maybe it comes back to here, this 1800, and then goes. But I'm still keen to trade it. And that goes back again to the dollar. And I think the dollar's the story, as always. At the moment, it's in a buy zone right now. So that's why I'm a seller of euro dollar. What needs to happen? Well, it's pretty clear what needs to happen to me on the dollar index. It's got to get back off this low that it's currently sitting on, which is what, 103.50 or something like that. As soon as there's a positive sign here, and there's none at the moment, I've got to say, but as soon as there's a positive sign and we see a higher low on the dollar index, then that's really the time that I will be looking to switch positions on all of these things, and I think they're going to create that opportunity at some stage. So that's where my focus is at the moment, mate.
Sounds
looking
good
for that turnaround.
Yeah, that sounds good,
But
mate.
Intraday, I still think there's going to be opportunities, in particular on, if you keep following the euro and looking at an untested daily pivot and finding a way to trade it towards that, you won't go far wrong in the next week or so. I'm pretty confident about that.
I mean, it's a so far the market's opened up and it's relatively slow. I mean, it's we haven't seen anything really take off or move significantly since we've been talking. Things obviously can and always can change. But I think right now it's just displaying the uncertainty from here, really. We've had a big run on Friday, and it's just one number, so everybody sort of like reacted off that number, and now I guess the thing is, do we take profit here, or do we see if this can keep going? And I'm kind of with you. I think a little bit of pulling back is probably likely, but at this stage, it's just there's just no conviction, and it doesn't look like there's going to be for a little while.
Well, not everyone's back on deck either at the moment.
This is true.
It's still very early in the year, so we can expect a little bit of quiet time, I think.
Yeah,
and
you're right, mate.
I'm okay with that. It helps us build into the new year in a fairly mild fashion. I will go through quickly this. You weren't in, obviously, Ash, when I was talking about what Peter was telling us at Trading Retreat, and that he'd been having a good win-loss ratio. In fact, I don't think he'd had a loss at that stage. He'd been trialling this breakout with gold rather than the pound. So I've decided to switch to gold.
Cool.
At the moment, and we're just trading as a clear breakout of the range, Asia to pre-London. So that's the new trial on the London Open trade.
Like it.
And I've set that as an OCO rather than just one direction. So we'll see how that plays out. What I didn't say from the outset was targets. Guys, we're going to trade this as we'll probably use pivots or obvious hard resistance or support levels. Now, the obvious hard resistance and support level for me is pretty much bang on our entry there. So I won't be using that. What I will be using today will be a pivot level, and the pivot level will be DR2. So we're on the hourly chart, right? That's if it goes long, of course. If it goes long, I'll be using DR2 as the target. If it goes short, I'll be using the daily pivot as the target. So that's pretty clear. So I'm just using the pivot levels. There's no take profits. There's no half off and anything like that. It's out there or out there, one or the other, which is probably going to give us about 1-to-1. So it's pretty cool. We will see how that progresses, and I'll keep a track of that. But it's really interesting. And I've had a look at this, not in the too distant past, but it seems that certainly in the last few days prior to the break, or the last few days even, that once it does break the range it does give you a reasonable trot. Certainly in the last 2 days, you can see that. And the day before was the same. So, yeah, it may be the one we need. We'll see.
Brilliant.
I'll keep a good record of it.
Cool, man. All right, we'll be back Thursday, won't we?
We will, absolutely. I don't think George mustn't have got the memo for today. Or is he still? He's probably still in Bali.
He might be. He might have fallen in love with it so much. He's still there. I'm sure he'll be back next week, mate. We'll be back in.
I'm sure he will.
You and I will be back Thursday. Good to have you back, mate. Good to be back.
Yeah, good to see your smiling face, mate.
Yeah, well, thanks to the guys in the room that did join us today. I'm sure numbers will build as we go. Obviously, if you got any comments, questions, or want to come on camera or mic, you are always welcome. But otherwise, we will see you Thursday, ready for the next round. And Thursday's the big day, so actually, it could be quite an interesting show. We'll see.
All right, mate. You have a good rest, and we'll catch you up on Thursday. Everyone else, thank you for coming back to be our trading buddies, and we'll catch you on Thursday as well. Have a great week ahead. Bye for now.